TV18 Motilal Oswal studio is Mr. Raamdeo Agrawal. They just came out with their Q2 numbers. The stock today is down close to about 4 to 5%. And that's because at the bottom line, you are seeing a drop of 70%. But that is courtesy a big swing that you're seeing in the treasury, the investment segment, where there is a loss of 200 crore versus a profit of 700 crore. But this is the notional mark-to-market loss that the company has seen on account of the swing in the equity markets in Q2. But this is notional. What actually stands out is the performance that the company has done in the asset and private wealth management, where the growth is very strong, 12% up on a quarter-on-quarter basis, and I think about 23% higher. Sorry, 12%, yeah, and about 13% high, 23% higher in the PBT level. Raamdeo ji, thank you very much for joining us in the studio. So I'm not focusing on the PAT because that is a notional loss, right? That is swinging it?
Yeah.
Okay,
so actually, one has to focus on the operating profit. Yeah. Operating profit is very resilient. It is, last year was 540 crores or odd, and this year is 555 or 5, something like that, 2-3% up. Despite the fact that we are broking business, which is 50% of the company till last year, has gone through this expiry challenge, So last year was the best quarter in September. Against that, that business made about 225 crores last year or 240 crores. This year it has made just about 175 crores. So there is a 50 crore loss out of that. And despite that, we have 2% growth. So what has happened is that business has clearly given 24% lower profit, but other businesses have more than made up. So the other businesses have grown at 30%. So the boom conditions in capital market is on, whether it is AMC, whether it is private equity, whether it is iBanking. iBanking is just about kind of really doing record numbers. So all of them are doing well. And our HFC, Housing Finance, which used to be kind of a very stuck kind of situation, has also grown at 25-27. So all the businesses, ex-broking, has grown at about 30%. Broking obviously has gone down by 24%, which I think this is the worst quarter. Starting next quarter, I think it will be much more manageable year-on-year comparison. But after that, of course, the growth again of 25-30% in broking also will start. So that's how the operating side look. As far as mark-to-market is concerned, it's linked to the market conditions. Yeah. So we have about $1 billion, about 9,000 crores treasury. I think September quarter is about 4% decline in the index. So there you saw this mark-to-market down. First quarter was very good, 600-700 crores up plus. Now this quarter is starting a little more positive. So let's see. I mean, nobody has any call what happens to the mark-to-market. But when you look at it on a year basis, you'll start getting about 15% on your 9,000 crores, which will be about 13-1400 crores. But that's for the people like us who believe in the long run. But quarter on quarter, these challenges will be there.
All right, and that mark-to-market will reverse some part of it in the coming quarter as well, in all probability.
So far, yes, but
hopefully
still there are 2 more months to go.
Indeed. Mr. Agrawal, good to have you in the studio as always. Now, a couple of days ago, we got this news of the proposed norms lowering the cap on brokerage as well as on expense fees, for AMCs. As well as for wealth firms. I wanted your take on it. The industry has been a little bit soft. So what kind of impact can it have on business? Obviously, it gives a bit of a dent. And how is the industry approaching this? Have you all approached regulators? And what's the logical way out of this?
Yeah, so I think it is extremely damaging. One is the business side of it. That's one part which this thing. But in this kind of a resurgence of capital market, which has become a huge, economic strength for the country, I don't think this kind of measures are required at this juncture. Because sell-side research has a very dominant, there's a power of sell-side research. I mean, you come to hear purely, even CNBC and all the channels are fed by sell-side research. And you don't pay anything to the sell-side research. So the public at large are educated by the company's stories by various minds. I mean, I may say buy, somebody might say sell. So this 1,000 analysts, sell-side analysts, they are the backbone of capital market. Now they are being paid by brokers, whosoever, say we have 50 analysts. So we pay them, we spend about 70-80 crores on just the research. So there must be Kotak, there must be Pablo, there must be, all these guys, all the foreign brokers, they all spend money on research. And that is being charged with the brokerage. It's not separate, it is charged with the brokerage. Now, the whole thing is going on very well. there are hundreds of companies, new companies which are coming up, which we don't know the name also. Who is going to cover them? Buy-side research is no substitute. In fact, sell-side research is extremely good complement to the buy-side research. So sell-side research must happen, and somebody has to pay for it. You cannot be at the mercy of asset manager to give you revenue.
So in the current form, it's extremely damaging, as you said.
Current proposed thing is very dramatic.
Yes.
I think regulator must...
Some kind of rationalization you all are looking for?
They must listen to the voices of broking industry and even the users. Who will benefit out of this? Nobody is for it. And yet, these kind of proposals are coming. So, I think we'll make a representation. Probably we'll try to make them understand our viewpoint. And then, of course, the regulator knows the best what to do. They have brought the market, they have brought the system so well. So far, SEBI has been one of the architect of this capital market to make it safe and liquid and dematted and one of the most aspirational market in the world. So I'm sure they will look at the merits of this particular thing. But 12 to 2 is like closure of the system. I mean, basically, we don't want sell-side research types, which is not right. I think sell-side research has a very distinct role, which is not understood properly. Because this 1,000 analysts cannot be replicated by side. Howsoever money you pay, you cannot get conflicting views. And the entire media, social media, retail, everybody is fed by the sell-side research. So I think they must actually provide more dollars for the sell-side research because the markets are expanding horizontally. And research dollars are not there. And now you're pulling out whatever little is there. I think it will destroy the market.
Raamdeo ji, well put. Always count on you to present the other side of the argument from an industry point of view. But just getting back to your business and the numbers.
Yeah.
Now your ARR revenue, which is basically your, the AMC wealth distribution, 61% of the overall revenue, and this number was 52% in Q1. I mean, that's a big 900 basis points kind of an increase.
Yeah.
I mean, at this rate, you will pretty much move to a fully fee-based model, sir.
Yeah, so there was also an effort to build non-broking based, fee-based business model like distribution we want to build. So, but we didn't want to come down this fast. I mean, from 50% to now we have come to 24-25% in broking. Yeah. So that was not the intention to go down that fast, and so it will come back as the situation normalizes. Q3 would be still kind of same. Q4 recovery will start. And I think 26, 27 will be full recovery on a lower base of 24, 25. So I think it will recover back, but it will not get back because other businesses are growing at 30%. Like my AMC has gone from 110,000 to 160,000. So it's almost 50% growth without mark to market. Because year on year, it has grown from 110,000 to 160,000 crores AUM.
Right.
And that has happened without market doing much. So everything is a net flow. So we get about 15% mark to market as we go along. So I think there is a clear, tailwind in all the capital market businesses, starting with the broking, AMC, private equity, iBanking, you name it, wealth management. Everywhere there is this thing, and that continues in my mind. In fact, it is going to gather pace as the credit flow, the economy picks up. All these uncertainties of trade agreements, all those things get behind, and GST cuts and all those things. My sense is that next 12 months is going to be much better for the market than last 12 months.
You want to put in some AUM targets, sir?
I can't do it. Don't get into that. Because I don't know. I mean, we are doing well till yesterday. So now what else can I say? I mean, we have done about 50,000 crores net flow last year. I mean, everybody tries to do a little better than that.
Okay, let's talk about a smaller part of your business, the home finance business. That's as well growing very, very well.
Very well now.
It's done well even on a sequential basis, profitability as well as improving. What are the targets on this particular vertical? Because it's small, but it's gradually expanding and at a decent pace. And there's an industry tailwind as well.
Yes.
Post GST 2.0.
Yeah. So I think here the new team is stabilized and the operating leverage is now building up. See, till last year, the AUM growth was happening, but because the feet on the street was more, the profit was stuck at about 120 crores. Now it is looking that we have got over it and the operating leverage is working, and on a 30% kind of AUM growth, we'll start getting 25 to 30% net profit growth.
Right.
So our intention is a very secular business, very predictable and very large opportunity. So initially we had a little teething trouble, but now this new team is fully stabilized, and I think from 25, at least it will contribute as much as the rest of the business are growing. So about 25 to 30% kind of a bottom line growth should be happening for the next 2 to 3 years.
Sir, just one question.
Yeah.
As you said, right, conflicting opinions make a market. You need buy side, you need sell side. Even when it comes to stocks and IPOs. On social media, there is a lot of outrage about expensive valuations about one particular, IPO which is open right now, Lenskart. But yesterday, when you see the kind of anchor investment and the demand, 147 anchor investors, and including Motilal, Oswal, and every blue-blooded anchor investors. So present the other side of the argument, which makes sense of this 200 times valuation.
So let me put it, because we are interested party, this thing. So stock specific discussion, and my knowledge is very little, let me tell you. And you have to speak to the fund manager who have allocated and how they think. But broad picture, I can tell you, now we are seeing for the first time birth of multinational companies, multinational consumer companies from India. See, it has not happened in first 10 years of operations. Somebody is operating in 50 countries, 100 countries, and that too touching the consumer B2C businesses. So this is happening for the first time thanks to availability of private capital, the risk capital, and second is thanks to internet. And these guys, they are very global minds. So I think these are the different companies than the old companies like, say, MyHFC. I mean, they are going to operate maybe in 3 states, 5 states, 7 states, or 20 states, but within the boundaries of India. So we are basically attacking $5 trillion of GDP. These guys, they have ambition and plans and execution of attacking $125 trillion of GDP, the way American corporations do it. So the outlook is different. Whether they are successful, unsuccessful, how successful, that is for fund managers. But it's very exciting time to see birth of young global companies out of India.
Well, I want to put you on the spot, but thank you for sharing your.
So that's a thought process, but I have no strong view one way or the other.
Well, I know the debate continues with regard to valuations, but as you said, you need to appreciate the business. Founders have a vision in there, so hopefully they get to that. But the debate on valuations does continue. Always a pleasure, sir, having you in the studio. Thanks a lot for coming down. Wishing you a good day ahead, and all the best for the coming quarter as well with regard to your results.
Thank you.
Thanks.
Well, time to slip into a short break. You come back, we'll continue.